And now our currency of the week, the Canadian dollar, dollar CAD, which is of course related to the US dollar. Demand from the US is key to the Canadian economy. But let's talk about many aspects of the Canadian economy and what it means for the Canadian dollar. So, recent figures from Canada were a bit mixed. The jobs report was really great. 53.7 thousand jobs were gained in Canada in the month of December, the last one for 2016, and that's of course great. Another good figure is the trade balance. Trade balance flips. In the US has a chronic deficit, the Eurozone has a chronic surplus. Canada, it's mixed, so it turned positive for a change, and that is of course good for the Canadian dollar. Worries in Canada, housing in Vancouver, Toronto, maybe also other cities remains a worry. In British Columbia, where Vancouver is, the local government, the regional government announced to change their taxation, and this hurts housing prices, and of course this sector is quite volatile. Retail sales disappointed in the last report just this Friday, and inflation is going nowhere fast. Okay, a drop of 0.2, and that of course has implications for the Bank of Canada. Speaking of the Bank of Canada, BOC, this is Stephen Pelosi, the guy who inherited Mark Carney's job. The recent statement, they said they're open to rate cuts, or it isn't really new, but they seem more dovish. They lean to the dovish side. They want a weaker Canadian dollar. That's not the only reason. But of course, there's lots of uncertainty over there. I don't think they'll move anytime soon. They'd rather talk than act like all central banks. But if they do have a tendency, it will be to cut interest rates, not to raise them. Oil prices, of course, oil is fundamental to Canada, key to the Canadian economy. Oil prices, of course, reached their peak, well, stood at very high levels until 2014, and since then they fell. So they did stabilize. WTI crude oil did find a range of 51 to 55 US dollars, and that's better than prices, previous prices of $40, $30, but Canadian oil extraction is expensive. They would need higher oil prices still. Okay. Now, why are oil prices stronger? Because of this OPEC non-OPEC deal announced back in November, and its implementation begins now. So far, there are positive signs about this implementation, but we'll have to see the real data only in February, because the agreement began in January. We'll have the initial figures only in February. Okay, so we'll have to wait for that. A development that did happen yesterday from the Trump administration is they announced a change in the Keystone XL, Keystone Extra Large, and South Dakota access. Okay, so these are pipelines from Canada to the main center of oil refining in the center of the United States, in Nebraska, in Oklahoma, in Cushing, Oklahoma. Okay, so it would lead Canadian oil in an easier manner to export to the United States and then export everywhere. This is a decision that the Obama administration decided, well, after a long delay, Obama decided not to approve the Keystone pipeline for environmental concerns. Of course, Trump doesn't care at all about the environment, or a very different approach, let's put it this way, and he reversed the decision. This helped the Canadian dollar. Yesterday, dollar CAD fell quite a bit, okay? This was good news for Canada, bad news for the environment, but I believe it's a bit too late. First of all, the project has been delayed for a very long time, and the enthusiasm is gone. And more importantly, oil prices are just much lower. There's less economic incentive to run this project. So we had a strong movement yesterday. I have lots of doubts if this could continue. And also, Trump talked about building the Keystone pipeline under new conditions, renegotiate conditions. Same thing with the South Dakota access pipeline. So I'm not sure we'll have if these things will really happen, and if it'll have a significant impact. Okay. Let's continue here. Focus back on Canada. Relations with the United States. Canada depends a lot on the United States. Of course, Canadian dollar is always seen as a commodity currency, but it's also in Canada, there are 30-something million people. In the United States, 10 times that number. And of course, their biggest neighbor, they depend on demand from the United States, Canadians. So renegotiating NAFTA could create, of course, a lot of uncertainty. But, and Canada is, of course, pro-free trade. They advanced a free trade agreement with the European Union. They're part of the now defunct TPP, Trans-Pacific Partnership. Canada, under both administrations, under the Trudeau government now, and beforehand under the Harper government of free trade. But we have reports coming out that a US-Canadian side deal, okay, excluding Mexico, could of course help Canada if it comes in favorable terms to Canada. So we'll have to watch out for news regarding trade with the United States. All in all, I see a bit more pressure to the upside, but it's quite choppy. So the Keystone pipeline, of course, limited the upside, but I think it's only for now. I think there's more pressure to the upside because Trump is basically against trade, and the fiscal stimulus that in the United States that could help Canada is not really helping. And oil prices, I don't believe they'll go up so fast. Let's conclude this special report about the Canadian dollar, about dollar CAD, with a look at dollar CAD charts. So if let's zoom out to see the bigger picture for our special currency of the week. Here we are at 131.53, okay, and of course the 130 line is support. Before that we have 130.80. Under 130 we have 128.30 and 127.70. Looking up, 131.80, 133.20, 133.80, and higher above levels that we haven't visited, well, no, a few weeks, 134.60, 135, and 136. Okay, so we're seeing choppiness, we're seeing maybe slight move to the downside, but I don't see that as lasting for too long. Okay.